So in the last 5 or so years, we've seen this rapid increase in the proportion of retail sales that are conducted online. And this was partly driven by the COVID-19 pandemic. And the growth in e-commerce has created sort of substantial demand for warehouses for the distribution and storage of goods that are ordered online. In addition to this, the growth of e-commerce has also changed the geography of retail transactions, and this has implications for the distribution of local sales tax revenue. So previously, transactions would occur in person in a store, and the local sales tax would then go to the city in which the store is located. And so for online transactions, the allocation of local sales tax was unclear. A landmark US Supreme Court case in 2018 helped to clarify this. It's known as the Wayfair ruling, and it expanded the ability of states to collect sales tax from remote sellers. And so following the court case, states were able to implement their own regulations, which determined how local sales tax would be collected for online purchases. So across the US, there are two types of sales tax systems, a destination-based system and an origin-based system. California has an origin-based system where retailers are required to pay sales tax to a local jurisdiction based on the location of the retailer. And for online purchases, this is the fulfillment center or warehouse where the order is packed and shipped from. So the sort of economic development issue that I'm looking at in this paper is how the growth of e-commerce and the Wayfair ruling have reshaped the politics of land fiscalization in California. So another way of putting this is I consider why cities pursue warehouse development as an economic development strategy, what are the benefits for cities, and who are the winners and losers, and more broadly, how e-commerce has sort of reshaped this city competition for retail in California. And this is an important issue to study as there are ongoing debates at the policy level around how sales tax revenue is collected and distributed across California, with various proposals to change the system and ban the use of incentives. My paper raises broad questions regarding how tax is distributed and the potential implications that changes may have on regional inequality. This paper draws on analysis of California city revenue data from 2005 to 2022, and it's a descriptive study. I focus on cities that contain a concentration of warehousing in California, and these cities are primarily located in 3 counties, being Riverside and San Bernardino counties in Southern California, which are often referred to as the Inland Empire, and San Joaquin County in Northern California. I compared sales and property tax revenue per capita to identify the primary sources of tax revenue for cities and how this has changed over time. My analysis of this tax revenue data was also supported by a review of annual financial reports for cities, sales tax rebate agreements, a review of policy proposals to regulate sales tax revenue, and also semi-structured interviews. I analysed the politics of city competition, covering the use of sales tax incentives and the proposals to regulate sales tax revenue that have been promoted. I also compare and contrast the sales and property tax revenues of 2 pairs of neighbouring cities. And this helps to illustrate the different trajectories of cities that have been proactive in entering in sales tax rebate agreements and attracting warehouses, and those that have not, so illustrating kind of the winners and losers under this system. I find that cities on the urban periphery, which contain a concentration of warehouses, have experienced substantial increases in sales tax revenues associated with both the growth in e-commerce and also the Wayfair ruling, allowing them to collect sales tax revenue from these warehouses. These increases are an unintended positive consequence of warehouse development for these cities. I also find that the dynamics of city competition have shifted. Previously, cities would compete with a neighbouring city for a local shopping centre. I observed that cities in California now compete with other cities at the regional or state level to attract these e-commerce warehouses that could attract sales tax revenue. And this demonstrates a new politics of land fiscalization in California. In terms of policy recommendations, one question that often comes up is whether California should shift to a destination-based sales tax system, where local sales tax revenue would be collected at the location of the consumer rather than the location of the warehouse. In this paper, I highlight that while a destination-based sales tax system would address competition for warehousing and the use of sales tax incentives, it would not necessarily result in addressing broader issues around regional inequality. The cities which are benefiting from the growth of warehousing are reliant on sales tax revenue as their primary tax revenue source. A destination-based sales tax system would likely result in a concentration of local sales tax revenue in larger, dense cities where e-commerce consumers are concentrated. And these cities typically receive much higher property tax revenues because property values are often higher. I suggest that a redistribution of sales tax revenues is required to address broader issues around fiscal sustainability, and also to ensure that cities that are bearing the environmental impacts of warehouse development and which support the e-commerce consumption of society are not further disadvantaged. These policy recommendations are relevant to other origin-based states as well as destination-based states, which have also experienced a redistribution in sales tax revenues at the local level due to the rise in e-commerce.